Yo, what is up, chat? Welcome to the stream. Yo, what is up, chat? Welcome to the stream. Try something else. Ready? And yo, what's up, chat? Welcome to the stream. Today we have a banger trade. Today we made 3.3k trading these two 150k combines. As you can see here, I've locked two of them out. Both of them are up 3.3 for on top steps copy trading. Awesome. I'll show you the trades. Let's go now. Bang. Cool. And then now, you know. And then wait for it. And then I'll do this. Wait for it. And then we come into this. Boom. Okay, so we will open up the market today at 8 a.m. Asian session or Australian time here. We open the market. As you can see, we've sort of consolidated in this range here after last night's break of structure at the newest all-time high. We've got the break of structure created a protected high on the 3-minute. I'll switch everything to 3 minutes so it's a bit easier. So on the 3-minute, we've made a protected high, and then at the time, this was a protected low on the 3-minute. Now, because of the 4th of July celebrations, America's closed up for the day. They stopped trading at around 3:06 a.m. If you can see on the bottom of the screen here, 3:06 a.m. Our time 3:12. Okay, 3:12. So they stopped trading here. Now, honestly, I was watching the market at this time. Don't ask why I was awake, but I wanted to long this. I was looking for a long opportunity, but you know, thank God the market stopped me out. I didn't take the trade. But anyways, coming into the market, this is what we saw last night. As the market opened today at 8 a.m. As you can see, this is what we saw. So just so we're a bit more aware, this is what we saw at 8 a.m. Asia session, Australian time in the morning. So we saw price respected this 3-minute protected low. Price continues to sort of consolidate, hang around it, doesn't really break through until bang, about 9:30-ish a.m. It breaks through. Now we've got a breaker structure, or we've got a change of character because this low has been taken. And yeah, in this sort of 3-minute external structure, we've got an internal 15-minute change of character. So obviously this is the 15-minute. If we just take it up to here, you can see that there's a breaker structure here on the 15-minute and just a massive clear leg up. Okay, so protected low here and just a big leg up. So what we have is we've got this channel here. We've got the breaker structure, and then we've got a range from here to here. Okay, so this is the external play. This is a 15-minute external move. What happens inside this leg is all internal. So this internal move has now had a change of character. So now we are looking at internal shorts. Now, there is a case to be made that we can look for long continuations at this area. However, considering that it's 1, all-time high, 2, US is off for the day, so low volatility, low market, low liquidity, and 3, we're in like sort of a late stage of the breaker structure in this kind of area here. Taking continuation trades is a bit of a low probability, considering, you know, if we are looking at the 15-minute external, the highest probability long continuation will be at the protected structure. However, it doesn't mean that we can't take internal moves. So if this leg was still heading on upwards, we could still look for a potential long in this section somewhere. But as we can see, prices started to reverse, and this means that we can look for a reversal on the low time frame, or in this case with the 15-minute bullish, we can look for bearish or shorts on the 3-minute, which is the internal of the 15-minute continuation. So we can look for shorts down this way. Okay, so that was sort of the first train of thought. I mean, sort of what I was thinking about for the day. Now let's actually have a look at what happened. So that is sort of the better way to think about it. Now, as you can see on the 15-minute, we'll go back to the 3-minute here. We can see that as we are in this internal leg, so this is now the 3-minute external, but you know, so this is the 3-minute external. So we've got the break, and then internally it can do all this or whatever. Technically it's still bullish until we get a change of character, which is what we have here. Now that there's a change of character, we can see that short is most likely going to continue. It's going to follow that trend, right? So we can take shorts, look for short positions up until, we can look at some shorts up until it gets to somewhere around the 50% mark. Now, keep in mind, there's the whole concept of premium and discount. And so in the premium section, you want to look for short possibilities, a bit more high probable. And then in the below 50%, that is discount, that's where the long setups are more probable, okay? So what that means is we sort of have two things. As price is pulling back internally on the 15-minute or externally on the 3-minute with a 1-minute internal, we can look for short continuations. Alternatively, if we want to play a bit of an external play on the 15 minutes, we can look for longs at this protected structure. Okay, that's pretty much our game plan. So as price starts moving, and then I'm just going to zoom in now a little bit more. So as price starts moving, so we're going to leave this long potential long setup here in case price does come down to this area. That is sort of what we can consider. Ooh, what do I do? Oh, yeah, it should be fine. Okay, cool. We can look for shorts on this internal move. Now, as we've got the change of character, we've got the internal protected high, and then we're going to make the internal protected low. So let me just fix this up. Let's say we didn't see any of this, right? So this will be internal protected low because price has decided to move back up. So now that we've got a let me clear this up. We've got a breaker structure. Let me just do like that. So this is technically a breaker structure, but because we're changing directions, it becomes a change of character. So I'll highlight it red. So now that we've got a change of character, we still have our top range, which is a protected high, and now we've got the bottom range, protected low. Where is the most probable area to take a short? Bang, protected structure, bang. So we want to look for protected structure, short continuations here. Let's see if price gives us that opportunity. As price continues to move, we don't see anything, boom, now it's broken structure, okay? So now this protected low has been swept, it's now a breaker structure, so we want to find the highest point opposite of the breaker structure when it's bearish, the highest point to find the protected high. So in this case, opposite of this breaker structure is this high point, so this becomes our protected high. Now, once we've got a protected high, we've got the break of structure, we want to look for the protected low. And so as price continues to come this way, ooh, now we've got a bit of a reversal. Maybe this is our protected low. So I'm going to highlight this as our protected low. Okay, great. We've got our range. We've got our specific, we've got the breaker structure with a channel here, one top and bottom. That's our range. We want to look for the shorts at this protected structure area. Now let's see if price actually gives us an opportunity. So as price moves, it hasn't come up yet. You can sort of ignore that line for the time being. Price has not come up yet. We're still looking. We're still going to be patient. Okay, what's going on here? And it looks like we've now got a break of structure. Okay, so what does that mean? This protected low has been taken out, and now we've got a break of structure. Once you get a break of structure, we have to look for the opposite protected structure line. So in this case, because we're going bearish, we want to find the protected high. Highest peak on the opposite of the break of structure will be the protected high. If it was going bullish, opposite of that break of structure would be the bottom, and that's the protected low. Just to remind you guys. Now, we've got the break of structure here. Fantastic. Now we've got the break of structure, protected high. Let's see the protected low. As price comes down, okay, now we've got to sort of respect. It's come back. So this is going to be a protected low. As you can see here, I've highlighted this. Protected low. Now, great. What is the most probable setup? A short continuation at protected structure. So let's see if price comes back into that area. As we can see, it trickles down, and no, oh, what is this? I happen to take a long. Now, why did I do this? Okay, let's break it down. There's two types of trades. You can take a pro trend trade. Well, technically there's three. You can take a pro trend trade, okay, which goes with the trend. You can take a reversal trade or a counter trend trade, which obviously goes against the trend, and then you can take a range trade. Pro trend trades are most probable. Counter trend trades can be profitable, and that is what I tried to do in this instance. As you can see here, there is two trades. I tried to take a counter trend trade, and one of my criteria is like sort of a double bottom or double top, depending which way the trend is, with inducement. And I can touch on that in another video. But we've got the initial touch here. And so what a double bottom is, if price is going down, as you can see, there's a breaker structure. A double bottom is when it comes down, it comes back up, and it respects this area. It doesn't break through like this one did. And this one here, this is a double bottom, and this will be a double bottom if it comes back. Now, my counter trend criteria is if a double bottom has been formed with in the middle inducement, which is like sort of like think of it as like price tries to come and break it, but it doesn't, so it reverses. So as you can see, price comes down, it goes back up, and in this area it tries to come and break it, but it doesn't, so it reverses. That is called inducement. People are trapped here, right? So people that are buying here, they're thinking it's going to go up, so they buy. And then it just comes back down and kind of just get killed or swept. And so what we have is a double bottom, one here and one here. And that is a double bottom with the inducement. And for me, that is a potential criteria entry for a counter trend trade. And so that is what I was looking to take. I wanted to take a long going against the trend, counter trend trade, low probability, to a protected structure, something internal, something quick, a little scalp. That was the whole point of, that was the whole idea of these two trades. Now, as you can see, we've got the one touch here. We've got the other touch here. It's a bit skew iffy, pretty, I jumped the gun, let's be real. And then I've got the inducement, pretty shit inducement there. So I tried to take a trend there, as you can see, lost it. Counter trend trades, low probability, whatever. And now I tried to take another one after the prices come down a little bit more. As you see this black candle, prices come down a little bit more. And we've got this inducement still. I tried to take a counter trend trade there, lost it again. So what does that mean? I'm not following the trend. Counter trend trades right now are not the play. So those two losing trades, valid, low probability. I probably should have sized down when taking counter trend trades. That's a little mental note. Anyways. Now that price has broken this protected low, what do we have? What do we have, chat? The protected low gets turned into a, say it with me, break of structure. Now, what happens once we've got the break of structure? Opposite side of the break of structure at the highest peak or lowest peak, depending on the trend. In this case, because we're going down, we want to find the highest peak. Opposite side of that, we've got this right here, the protected high. Okay, now we want to look for, what is it? The protected low. So as we come down, okay, what do we have here? Okay, price has bottomed here. Price has bottomed here and it has turned around. So guys, chat, what is the most probable trade? Now that we've got our range, we've got the breaker structure with the top at this protected high and the bottom at this protected low. What is the most probable trade? The pro trend continuation at protected structure. So we've got the protected high here, protected low, and the breaker structure. What we want to do now is find a short opportunity at this protected structure. Now, as we dive into more nuance later, we can sort of figure out, okay, which part of the protected structure are you talking about, Brandy? Like, which area? Am I taking shorts from up here or down here or what? So one of the strategies is highlighting the opposite candle of the trend. So in this case, the trend is going down. So we want to find that last high candle going up at the peak to indicate our point of interest, because that is the highest point, right? So in this case, here is our point of interest. Now, if I highlighted this area, I want to look for a short in this area. So what did I do? I actually, now that we're in it, we can actually see what I did. Now, this is my trade here. So prices come up, okay, just so I'll make this one clearer. So let's just say this area. So in this area here, I want to look for a short. Prices come up, it's rejected, okay? It's started going down, and that's where I entered. So I entered a short position at this protected structure, and where did I want to target? Generally, we should target the opposite point of protected structure. So I could have targeted here, right? Because it's pro-trend, we're following the trend. That's most probable. But I was a bit not scared. I was driving with the missus, so I sort of didn't want to be doing both. And so I kept it nice and tight. So after 2 losses, I just wanted to take some money off the table. I took a pro-trend continuation at protected structure, shorted here, price came down, it came up a little bit, but I held strong, and price kept on going, and bam, we took profit right there. So obviously, as you can see, price comes down. I could have held the profit there, but I had a limit order and I was driving, so I didn't want to drive and trade. So bang, and that was the trade of the day. Now that we are up $3,322.70. That is pretty much the entire strategy, chat. There's a lot of other nuances as well. You know, it comes down to data collection, reviewing what's most probable, other things like inefficiencies, fair value gaps, imbalances, inducements, deep mitigations, weak and strong protected structure, legs, etc., etc. Anyways, doesn't matter. We took our money off the table. Okay, we'll just continue just for the sake of it a little bit more. What happens to the protected low now that's being pushed through? Gets turned to a break of structure. Where is the, what do we have next? The protected high, opposite of the break of structure. So now this becomes a break protected high. Let's go ahead and look for the protected low. So as price comes down, we want to look for a reversal. Now this is technically, it did come down, but I'm not too sure if I like this reversal. It looks like it did hold pretty well, so I'm going to drop this one down. So this is now the protected low. Okay, what is the most probable trade? Now that we've got our range, we've got the breaker structure, protected high, protected low. Bang, up here and up here. What is the most probable trade, guys? Now, this is another thing. As you trade, you have to keep in mind where you are in internal and external. So right now, this is 3-minute price action, as you can see on 3-minute, but we are within 15-minute external bullish trade range. So if I zoom out a little bit, as you see here, now I am zoomed out. This is the 15-minute protected high. This is the 15-minute breaker structure. I'll clear it up a little bit more. 15-minute breaker structure, 15-minute protected high, and the 15-minute protected low. So now this is our external range. Now, what did I say earlier about the more probable trades in premium and discount? When we are in premium, so this is a quick measuring tool. We can see here 50%. Anything above 50%, shorts are a bit more high probable. Okay. When you're in below the 50% line, longs are more probable. Doesn't mean it happens all the time. It's just statistically speaking, a bit more probable, right? So now that we know this, okay, I've taken this profit off the table. I have to pay attention to the external structure. These are all the other factors that apply and sort of come into play. I have to pay attention. Yes, I can continue shorting, but as we can see on this external leg, realistically speaking, longs are more probable. If we look at everything that's happened in the past, however long, see that longs are killing it. So I can't keep looking for shorts in this area. Okay, so now let's just have a look at where we're at. So at the moment, we know that we are in discounted areas in the 15-minute leg. Okay, so yes, I could take shorts still. Let's just see how that plays out for us. And now, honestly, we're at a point where I don't know what actually does happen to price action. So we can either take this 15-minute long at external structure, or we can take this internal or 3-minute pro trend continuation. So we can look for a short here. Bit of a low probability trade at this point because, like I said, we're in discount. But we'll just have a look and see what happens. So does price come into this range? Let's have a look. It's sort of jiggling. Okay, now we've got a break of structure. Bang. So break of structure. What do we have now? Protected high. Okay, where is our protected low? So now we've got a protected low here. Do you see how this is, chat? It's very simple, pretty easy. Now we want to look for a short or a pro trend continuation at this 3-minute protected structure. Okay, so now that we've got that, does price come into this protected structure area for us to give us a short? Now, another thing, what is the most valid area to look for the short continuation? So in this case, I'm going to skip ahead a little bit. I'm going to take this sort of last up candle before the down. Technically, it is this one here. Okay, I'm going to zoom in a bit for you guys, chat. Technically, it is this one here, but this one is a bit more recent. It kind of sweeps all of this previous liquidity. So I'm going to sort of take this one into account for now. Now, I haven't seen what's going on ahead. But we'll keep on watching. Okay, so as price continues, let's see where it goes. Okay, it did technically almost tap in here. It doesn't look like it did exactly, so we'll still look for the short if it gives us an opportunity. So it's kind of ranging this price action. Still doesn't give us a short yet. We're still in this 3-minute bearish move. What is happening? Okay, and that's where we're at. Chat, that's where we're at. So if I was actually sitting here waiting for a live trade opportunity, I could look for a short continuation here. Or, now that I'm considering the external factors, I could look for, as you see, we're in that bottom 50% here. I could look for a long continuation, okay? So those are the options here. I can look for a long, or I can look for an internal short. At this point in time, there's just so many different factors that come into play. Shorts were a bit more probable in the premium area, okay? Now that we've taken advantage of a short that was just teetering on the 50% area, we've taken advantage of the short, we've stopped ourselves out for the day, we locked ourselves out, we're not trading anymore. That's sort of us done now, and it hasn't tapped into an area like here. Yes, you could look for counter trend trades, but are they probable? Not really at the moment. I'll give you another example. So if price, what a counter trend trade will look like. So if on this 15-minute price action, you got the breaker structure. Let me just zoom out. 15-minute breaker structure, 15-minute protected high, 15-minute protected low. We could take a pro trend continuation at protected structure here. We can target the opposite side here. Yes, that is valid. If that's a pro trend continuation, okay, what does a counter trend continuation look like? Well, if price or counter trend is what it says, countering the trend, and so if this is pro going along with the bulls, we will be longing that. Counter trend would be a short at the external structure, which will look like something like this. A short here, all the way to somewhere like here or somewhere in the middle, just to be a bit more conservative, right? And the criteria for that, for me, would be is if price comes up, creates inducement. Remember, it doesn't hit that protected structure. Sometimes it can. Sometimes it can. Sometimes it can. But in the event that, sorry chat, in the event that it doesn't, I mean, it's still valid, it can come here, and then it comes and touches it again and doesn't break through, that for me is a valid counter trend trade. So that's where I'll be looking at for a short. This is a counter trend, and this will be a pro trend. Capiche? And that's pretty much it, chat. That's all we're doing. We're just looking for some high probable trades. Nothing certain. You know, there's never 100% guarantee or probability and stuff like that. So we just look for the high probability. As you can see here, I took a pro trend continuation here yesterday on that one, and 2 losses. As you can see, I'm probably going to start implementing a new rule. 2 losses one way, and I'm looking at the other way as a trade. So as you can see, I was trying to short here, lost. Short here, lost. I'm changing my style. I'm going long. So I'm long in here. And that's exactly what happened today. I learned from yesterday. I took a short, long here. So let me just zoom in again. Long here, lost it. Long here, lost it. I'm not going with the trend. So I have to short. And that's it. That's it, chat. That's all we're doing. So look at this. Even here, okay, so this is a potential, if judged based off the action that happens here, price action that happens here, we could maybe consider this. This is a somewhat of an inducement. It's not the greatest. Okay, so we have some people that tried to push it down but didn't. We have some inducement. This could be a potential counter trend trade. We could look for a long here. Like if I was paying attention, I could have looked for a long here, targeting maybe up just there, this last sort of area. Because price is bearish, okay? As it's sort of come up, it's created people that are trapped. We call this inducement. We've got a trend line here. All those people that were trapped, they got swept in this sort of price action. And then it comes down to the protected structure. It doesn't break through it. It doesn't break through it. And then we could potentially look for a long or a counter trend trade. That's the 2 options. I can short here at the top if it comes up to this area, or I can long here at the bottom if it comes into this area. So those are our two valid options, chat. That is the recap for today. If we want, I can let the stream run out and see what actually happens. As you can see, look at this. It is skyrocketing. Now, if I actually took this trade, this is my TP. Price action, it's 1140. I don't think... So this is probably London right now, right? Yeah, this is London because the US are off. I would have I could have closed early, bang. If I risked 500, I just made $1,000. Okay? Because I just wanted to keep it tight. You know, this one could have gone all the way to the opposite side. This one, counter trend, I would have just taken it somewhere close. And look at that, bang, hit that. Who knows? This could be the move that, remember, on the external structure, yes, we were looking for longs here. That is more probable. However, it could happen anytime in this leg. It's just that it's more probable in the discounted areas, if it's bullish, or even more probable at protected structure. Okay? So this could be, who knows, this could be the actual move that goes off and makes a head. And if you're wise enough, if you're skilled enough, you could be the person that's held the trade out all the way to the end, risking $500 to make $7,000. Okay, so that could be a play. That's essentially what is going on, chat. That's the strategy. That's everything you need to know, and that's how I trade. So that is my trade recap for the day. Hope you enjoyed the video. If you have any questions, don't hesitate to put anything in the chat, and I'll see you in the next video. Don't forget to like, comment, and subscribe. Thank you.